The stock market can feel like this exclusive club with a secret language, right? But what if I told you that in the next couple of minutes, we're not just going to learn the password to get in, we're going to understand the entire language? Let me tell you a story.
Have you ever heard words like dividend or ETF and just felt your brain kind of shut down, like you totally missed a lesson everyone else seemed to get? Trust me, you are not alone, and we're going to fix that right here, right now.
And to do that, I want to introduce you to someone. This is Miles, and his story, well, it starts with a really simple, really small goal that I think a lot of us can relate to.
So this is Miles. He keeps hearing his friends talk about investing. He sees it all over the news, and he's got this nagging feeling. That feeling that he's being left behind? His goal is simple. He just wants to get started. Now, he's not starting with a fortune. He's got $50. That's it. A small, manageable amount that he's ready to put to work. But the second he tries, he hits a wall. And this wall, it stops so many people dead in their tracks. It's not built of bricks, though. It's built entirely of words.
Every single time Miles opens an investing app, it is a full-on assault of words. Stocks, shares, dividends, bull market, market cap, ETF. It's just this constant stream of jargon that honestly feels like it was designed to keep people like him out. And what happens when you're hit with all that confusion? Paralysis. It's too much. So like most beginners, Miles just closes the app. He puts it off. He does absolutely nothing. But that feeling of being left behind just keeps nagging at him. So one day, he decides, you know what? I'm going to ignore the confusion and just take a plunge. And this leads to a very quick and pretty painful first lesson. He thinks to himself, how hard can this really be? He just picks a company he recognizes, a tech brand, a coffee shop, doesn't really matter. And with absolutely zero understanding, he puts his entire $50 in. And for a second, it feels good. He did it. He's an investor. His balance is sitting right there at $50, just full of potential. He checks it the next day and the day after that. And then something happens.
The number on his screen turns red. And we're not talking a small dip here. It's a sharp, stomach-turning drop. 40% gone. Just like that.
His $50 is now $30. It is a total gut punch. He didn't just lose money, he feels foolish, like he was right all along, that this game just isn't for him. He is so ready to quit for good.
But after the frustration starts to fade, something else clicks into place. It's a super simple realization, but it changes absolutely everything for him.
He gets it. The mistake wasn't that he invested his money. The mistake was that he did it completely blind. He was trying to play a game without even knowing the rules. And he decides right then and there, before he puts another dollar in, he is going to learn the language. So he starts fresh, but not with money. He starts with knowledge. He decides he's going to crack this code, one term at a time, starting with the absolute basics.
First up, stock, the most fundamental word of all. See, a stock isn't just a number blinking on a screen. It's a tiny, tiny piece of ownership in a real company. When you buy a stock, you're literally buying a slice of that business. So then, what's a share? Well, that's just one single unit of that stock. Think of a big company like a giant pizza. Buying one share is like buying one single slice. The more shares you own, the bigger your piece of the pizza is. It's that simple.
Okay, so where does all this buying and selling happen? That's the stock market. It's really just the place where all those little pieces of companies get traded between people every single day. The best way to picture it is just like a giant farmer's market. But instead of people buying and selling, apples and oranges, they're buying and selling slices of Apple and other big companies. It's just a massive organized marketplace. That's all it is.
So, with those core ideas down, Miles starts to feel his confidence growing. He's ready to unlock that next level of terms, the ones that help you actually understand the difference between all those companies at the market.
He learns about something called market cap. It sounds complicated, but it's just the total value of a company. A huge company is like a giant cruise ship. It's stable, slow-moving. A small company is more like a speedboat. Yeah, it can move really fast, but it's a lot riskier. Maybe that company he picked was a speedboat. Then he learns about dividends, and this is a real game changer. Some stable, established companies will actually pay you a small bonus, usually every few months, just for being a loyal owner of their stock. It's like a little thank you gift for your patience. And then he discovers the term that changes everything for him:
ETF. That stands for Exchange Traded Fund, and this is the key. An ETF isn't just one slice of pizza. It's a whole basket of different stocks, all bundled into one single thing you can buy. Remember that market analogy? Well, instead of trying to find the single best apple in the entire market, which is pretty much impossible, an ETF is like buying a pre-packaged shopping basket that has a little bit of everything. So if one apple turns out to be bad, it doesn't ruin your whole investment. For a beginner like Miles, this is a much, much safer way to start.
So Miles's journey started with $50 and a really painful mistake. But by taking one step back to simply learn the language, he turned that failure into a foundation. He realized he didn't need to be a genius. He just needed to understand the basics. And now, you understand them too. So the only question left is, what's your next step?
You know, investing your first $50, it kind of feels like you're handling $1 million, right? On one hand, you're so excited. You're finally doing it. You're in the game. But on the other hand, you're absolutely terrified. I mean, what if you lose it all on your very first try? And you know what? That fear is completely real. And it usually starts with one very common and pretty painful mistake that almost every single beginner makes. So, meet Miles. He's been hearing everyone talk about investing, building for the future, and today he finally decided to take the leap. He didn't bet the house or anything. Just $50. A small, responsible first step. And you know, he felt smart. He felt ready. He's checking his phone, feeling that little thrill of being an investor. But then, almost immediately, something went very wrong. That excitement, it just vanished. And it was replaced by this cold, sinking feeling in his stomach, the kind of feeling that makes you think, oh no, I've made a terrible, terrible mistake. 40% gone, just poof, in an instant. His $50 turned into $30. That smart first step he was so proud of, it now felt like a complete and utter failure. And the only thought in his head was, I gotta sell. I have to get out of this right now. Okay, so that panic that Miles felt, it's completely normal. But why does it feel so incredibly scary? To figure that out, we need to pull back the curtain and understand what's really happening behind the scenes. Let's break it down. So what is actually happening when your screen turns bright red and your stomach just drops? Is it just random chaos, or is there something bigger going on? Well, Miles basically walked right into something called a bear market. But here's the thing you have to understand. It's not just about numbers, it's about emotion. See, prices go down, and so people, they panic. And this is the exact moment that most beginners decide, you know what, investing isn't for me, and they quit. And what causes all that panic? It's a little thing called volatility. Honestly, you can just think of it as the market's mood swings. The more it jumps up and down, the higher the volatility, and the scarier the whole thing feels. For someone new like Miles, that wild ride feels like pure, unfiltered risk. But right here, this is where everything changes. What if Miles was looking at this all wrong? What if the real secret wasn't about trying to avoid the panic, but about completely changing how he was looking at it? You know, it really just comes down to two different mindsets. The first one is kind of like playing a slot machine. You're just gambling, hoping for a quick win. But the second one, that's like planting a tree. You're investing for the long term, holding on for years to let real wealth actually grow. And just like there are bad days, of course, there are good days. For every bear market, there's a bull market. This is when prices are rising, everyone's feeling confident, and investing feels, well, it feels easy. The secret is just knowing that these two are always part of a cycle. So let's zoom out from Miles's terrible first day and look at a 10-year journey. See that dip there in year 3? Yep, that's his panic moment. But when you see it as just one little point on a much, much longer timeline, it suddenly seems so much smaller than the growth that comes after, doesn't it? Okay, so having a long-term view definitely helps with the fear. But is there a practical way to protect yourself from those gut-wrenching drops? Like a strategy to build a simple little safety net? So what was Miles's real mistake? It wasn't just that he panicked. No, it's that he put all $50 into one single thing. All of his eggs were in one very, very shaky basket. And the fix for this is a simple but really powerful idea: diversification. It's just a fancy word for not putting all your money in one place. That's it. You just spread it out. Because if one of your investments goes down, the others can help balance it out. Just think about it like this. Instead of one big $50 bet, Miles could have made 4 smaller bets. Now, if one of them has a bad day, it's just a small dent. It's not a total disaster. And suddenly,
that panic doesn't feel so powerful anymore.
And this is the moment. This is when it all just clicks into place for Miles. He realizes it's not just about the numbers or the charts. It's about connecting those feelings of panic to a real strategy for feeling confident.
So here's his journey, right? First, he felt that raw, awful panic of a market drop. Then he learned the language to understand what was even happening, words like bear market and volatility. And finally, he found a strategy, diversification, to actually manage it.
And this all leads to the big realization. The stock market isn't necessarily confusing, it's not just for experts, it was just unfamiliar. Once you start to understand the language, the fear begins to fade and everything becomes so much clearer. So after all of this, what do you think the biggest mistake you can possibly make is? Is it picking the wrong stock? Investing on the wrong day?
Nope, the biggest mistake isn't losing that first $50. It's letting the fear of the unknown stop you from ever starting in the first place. It's waiting for that perfect moment that, let's be honest, never really comes. The real risk isn't what you might lose today, it's all the growth you'll miss out on tomorrow because you were too afraid to take that first step.